We have Bitcoin trading at $57,500. We have the PPI inflation data, which came out yesterday, and that has changed and affected the probabilities for what the next interest rate cut will look like. And that's, of course, going to be a driver for what we're going to expect in the next 3, 6, 9, and 12 months, which is our outlook for the rest of the bull run. So smash the like button, hit the bell notification, and subscribe to the channel. And then also let me know in the poll section. We're running a poll right now. I'd love to know what percentage of your portfolio, at least your available capital for a crypto portfolio, is allocated into the market right now. Are you under 25%? Are you 25 to 50%? Are you 50 to 75%? Or do you have more than 75% of your available capital allocated into the markets? Let's get a little bit of a gauge for where the 𝗕𝗤𝗓𝗏 fam sit within allocation in the markets. And then let's get straight into the show content. Dailies holding up over here on Banter Bubbles. Weeklies also holding up, and the monthlies are starting to turn. So we may be turning a very, very important corner within the markets, and we're getting most of the economic headwinds out of the way. Things like the PPI, CPI, all of that inflation data has come out. You can see over here we do have the PPI, which came in at 0.2%, so higher than what was expected. That's now repriced the probabilities of the rate cuts. Yesterday I was looking at this, I think it was somewhere around an 85% probability. It was above 80% chance that there was going to be just one 25 basis point rate cut. Now you're looking at that shifting to only 57%. That'll be 25 basis point and 43% chance of a 50 basis point rate cut. At the end of the day, there will be a rate cut. It's just a question of how much. I would lean also towards this 25 basis point rate cut, because the markets, at least in traditional finance, still remain very, very resilient and strong. There's no signs of anything in the stock market per se breaking. So they don't really have reason to do a 50 basis point rate cut, but we'll keep an eye on that. We also saw the rejection over here on the DXY, the dollar index, which we've been paying attention to. This is a key level, that downsloping trend line. I think we've nailed this literally every single step of the way ever since the top over here, looking for distribution, breaking below the pink box. And then we looked for this is the final level to break. We broke that. Then we came rejected. We rejected again. We've really been getting this picture perfect, and we're viewing this as major distribution, right? If we do get major distribution over here, remember that's what causes those up moves in both the stock market and crypto. And that's why you're seeing the stock market rebound really nicely. Now, a lot of people believe the stock market has created a double top. Please keep in mind the trend is your friend till the end of the trend, and you still have high highs and high lows. Therefore, very unlikely that you have a double top in the stock market, and you should see these continue to trend towards new all-time highs. And we've even measured out a timing factor of where the stock market may find some sort of a meaningful top, and that's still leaning all the way into middle of next year at the very, very least for the S&P 500. So all in all, that is the bias over there. And you can see over here, if you look at the correlations between Bitcoin, S&P 500, and the Nasdaq Tech Composite, over 5 years, the correlation coefficient is very, very significant and almost trending alongside in a picture perfect fashion over there, tight and trending onwards and upwards, right, with each other. And when it's bear markets, they're trending down together. So Bitcoin's still trading very much like a tech, at least a tech stock over here, or the S&P 500. So all in all, that is in unison. Now, one thing that's breaking away from the rest of the herd is gold, right? And if there's one thing that can sniff out a recession or problems in the market, it is gold. And you can see gold pushing towards new all-time highs. So will we be in a recession? Well, technically we have been. Remember, the definition of a recession was 2 back-to-back quarters of negative GDP growth, and that's exactly what's been the case. So gold moving towards the upside. The question is, will Bitcoin follow? Because Bitcoin also does have some correlation to gold. If you look at this chart over here, you can see for the most part, as gold moves towards the upside, you also have Bitcoin leading into those big bull runs. And now, right now, you have that divergence taking place, right? With the light blue line being gold, trending towards the upside, and the dark blue line being Bitcoin, which is completely diverging. So we should expect that this coefficient will snap back into unison once again, and you should see Bitcoin catching up to gold over there. We're also looking at the overall exchange volumes over here, and it's still kind of just chopping about. we really want to see a marked uptick of the 7-day exchange trading volume increasing. Remember, this means that new market participants are coming into the market and depositing money onto exchanges, which they're looking to risk in the market. So we'll pay attention to that. Remember, we still have an outlook that Q4 is going to be bullish for the markets. We've seen this every halving year, 100% hit rate so far. So chances are this time probably won't be different. We've seen the funding rate heat map completely reset, which shows that shorts are actually or shorts are actually paying longs to go long. So we're at that point in the market cycle. If you are longing altcoins in terms of the funding and the fees that you pay to go long, you'll actually be getting paid by the shorters to take those long positions, because usually the funding will work in the sense of wherever the majority is, those are the people that pay. Where the minority is, those are the people that get paid. And there's very few people, at least according to this chart, that are running longs on altcoins. You can see we haven't had a major liquidation event as per the bottom histogram chart over here for quite some time. So still waiting for that. We'll be looking for a flush of either the longs or the shorts. That will probably give you your next directional bias. For now, the funding slightly favors in the short term the short traders, because you do have in the very, very short term over the last 2 days longs building up at these current levels. We'll go over the levels that you need to be looking at, where your major resistance levels are, as well as the support levels that we're currently forming right now, which puts price in a tight spot. And again, in agreement with this, you'd be looking for a big move in either the up or the down direction, creating those liquidations. That's what happens following those tight consolidations into the apex of a move, right? You can see fear and greed down to 32. So still a lot of fear within the markets. And this is one thing that I do want to pay attention to. It's the USDT dominance. So as Sept says over here, USDT dominance rejected at a key resistance level. This could mean that USDT will soon be converted into Bitcoin and crypto. Remember, when that dominance drops, we looked at that yesterday, that's where Bitcoin goes up, but it has been uptrending. So that's something you do have to pay attention to. Dominance has been uptrending. It's currently at 5.94%, but coming into that trend line. If we start to see a rejection from here, and you also have the RSI rejecting at the bottom, then that could lead to Bitcoin's next move towards the upside. So keep an eye on that. If you look at fundamentally what could bring that, well, this is pretty interesting. Tether made $6.2 billion last year, and most of their profit was actually from the holding US treasuries, right? But now the Federal Reserve is going to be cutting interest rates, which means they're not going to get the same returns by holding those government bonds. They currently hold $4.38 billion worth of Bitcoin. And the question is, what do you think they'll do next, right? If they do start to sell those treasuries and move some of that into Bitcoin to maybe allocate a little bit heavier into Bitcoin. We know they already take a massive portion of their profits every quarter and they're buying into Bitcoin. The question is where they're going to move those treasuries when the interest rates do get cut. And we spoke about the $6 trillion in money markets as well, which are probably also going to flow into risk on assets. And there's a spillover effect, right? Realistically, most of that's going to the stock market, from money markets into the stock market, but there will be a spillover when people start to realize the gains that you're getting in crypto. They'll probably risk a small percentage. And even if 1 or 2% of that capital flows into crypto, that could be what leads to the final moves. Because every cycle, there must be something bigger and bigger that comes into the market to continue these bubbles, right? The peak euphoria phases that we've come to know and love within crypto. So here's your Bitcoin chart, still very much range bound. You can see this is the predominant range between the two orange lines. That's definitely the clear level to reclaim. That will also get you above 65K, which breaks you back above the 21 EMA, breaks you out of the top side of the range, and then you can start to look for continuation. So conservative traders, we spoke about this yesterday, literally just wait for that. If you're conservative, if you're aggressive, well, you're looking to bid the bottom of this low boundary of the parallel channel. Here's your parallel channel holding price towards the downside, also, which you can be considering, or you can consider this as a massive bull flag, right? So you're looking to aggressive traders bid the bottom of that channel. Stop loss goes below this wick over here, and you really don't want to see price break below that. If you do, there is major support. In a worst case scenario fashion, I'd be looking for a sweep below $42,302 to take out the yearly open. I think that's low probability, but low probability doesn't mean an impossibility or zero chance. There is a chance of that happening, especially if the trend is towards the downside. Now, Elliott wave traders will be viewing this massive parallel channel as well, and you can currently see they, at least in terms of the way the counts have worked, well, you had here you have wave 1, which leads to the upside, wave 2, wave 3. This would be the end of wave 4, and we're looking for the 5th and final wave towards the upside. So let's see if you can start to break above that 65K level. We've seen the first promising sign now, in the sense that we are printing a higher low at this current level over here. So maybe a little bit of an A, B, C, D, E corrective phase within that final wave 4 count to end the wave 4 and lead into the wave 5. Now, if you, again, significance of breaking above 65K, if you do break above $65,000, you've confirmed the end of wave 4 and the beginning of wave 5 of this Elliott wave count, which will take you in to the next leg up, which will be $100,000 plus, right? So you do want to watch for that. We're still coming off pretty low volatility, and keeping it super simple, just flipping this level of this key zone, right? SR flip, previous resistance, flipping it into support, kind of losing it again. And that's where the question mark remains. Is this support or resistance? What are we going to flip this in? You need a bit more time. I lean towards the deviation back above and flipping it into support, which would look something like this. Flip it into support. Remember, this is also your cup and handle. You're forming the handle right now, and then you're looking for the breakout at a later stage. So if we look and study the price cycles and how they've been the reactions, at least forward looking, following those election phases, Trader Main suggests over here, he says the last 3 bull markets topped in either November or December, 1 year after the presidential election. You guys will know that I'm looking at about 12 more months of this bull run, looking for potential top sometime in October of next year is the most likely outcome. Of course, we have to readjust the levels depending on how price is reacting, how quick we're moving up, or how slowly we're moving up. That will affect the trajectory of how long the cycle will last. But when you do look at this, November 2012 elections, and then the top was in November 2013, right? November 2016 elections, the top was in December 2017. November 2020 elections, the top was in November 2021, and there it is on the chart, right? You can literally have a look at it. We've studied this a whole lot. I think focusing on timing within markets is sometimes far more important than focusing on price targets using Fibonacci extensions and things like that, because those are not as consistent and reliable as timing. And this is what the timing suggests, right? From top to top, historically, we've seen between 46 and 49 months. And therefore, I've labeled it between August and November of 2025. And it's very interesting the way, you analyze it with the election phases, with the halving cycles, every single way that you look at it, it all points towards continuation of this bull run and higher prices. Now we're starting to see signs of things shifting over here, because we have the first daily candle close and the next daily candle open, or the first open as well, above the 9 and 18 exponential moving average. If we can see 3 of those occur above these levels, that will give the opportunity to start to flip this bullish again. But I do want to outline there is going to be resistance overhead in the form of the 50 simple moving average, and that's coming in around that $60,000 mark. It's starting to drop ever so slightly, but watch for the reactions into those zones. The expectation over here would be, it's going to be choppy in this region as price and traders try and understand where things are going to go to next, as you start to flip certain levels into support and try and overcome overhead resistance levels. This will take time, and I wouldn't be surprised to see something like that, leading into the 18th of September, which is when I believe is the next decision, right? Exactly, the 18th of September, that is where the next decision is. And if you look at this little trajectory and you imagine price obviously grinding up through the zone over here. Let's grab our highlighter tool, grinding into this as these EMAs compress and you reach the apex. Well, where does that line up? That is the 18th, right? That is the 18th of September. So that's kind of what I'm watching for over there. That's a potential trajectory. Expect more frustration and chop. Look for your opportunities as close to the invalidation level as possible, and you should do very, very well. I'm also viewing the possibility for a Wyckoff accumulation schematic at play. Remember, these are similar to, when you look at Elliott waves, it becomes a moving target. So you have to take it with a pinch of salt and you have to use it as a guideline. This is not a trading system that you'll use when you start to see the phase C occur with spring phase over there, which I'm going to show you on the chart in a moment. It's not like you just suddenly buy spring because the Wyckoff accumulation schematic suggests that that's a spring phase, but you can study the information to help you put the puzzle pieces together to determine where things may go next. Now, what you'll notice over here is when you do move into that spring phase, which would essentially be sweeping below the bottom of the range, there's usually an increase in trading volume at that low. And then following the increase in trading volume, you almost immediately spring, as the spring phase suggests, spring back into the trading range and then slowly grind up, leading into signs of strength and your final point of supply. And then that's where things start to move towards the upside. So let's see if we have a look at the charts over here and we quickly throw on a volume profile. So let's quickly put on the volume over there and we can actually have a look at this. Let's put on just the normal volume. Maybe I'll also put on the volume on the side profile and then we can have a look at that over there. Okay, no, not this one over here. Let's take that off. So what I wanted to have a look at over here is we've been viewing for quite some time the 6-month consolidation. We said that, you know, once the top was put in over here and you go into those corrective phases, these corrective phases can last for 4 to 6 months. Well, we've hit that 6-month mark, right? We're actually one day over the 6-month mark. And we say by that point, the lows should be in. And you should see, you know, maybe continue chop, but slowly but surely grind towards the upside. If you look over there, this would be known as the spring phase. And it is marked by very, very high volume, which is what you would expect following, or if it is in a Wyckoff accumulation schematic and following the spring phase, it's usually marked on high volume and showing that, you know, bears gave their best shot to break things down at that level, and they were unable to do so. And consequently, the bears start to lose control, and you go into, you know, that last point of supply, which would be here, the retest, that would be also known as the high low. And then slowly you start to grind up, leaving, of course, phase C into phase D, where the sign of strength starts to take place, and you can see that bulls are starting to take control. At that point, you're starting to reclaim, you know, some of these key levels that we outlined, like the 65K level, like the 21 exponential moving average. You'll start to reclaim, of course, the 50 moving average over here, as well as simple moving average, and the 9 and 18 will start to cross towards the upside. As that starts to occur and appear within the markets, we know that there's signs of strength, and that's where optimism starts to come back into the market, and you lead into phase E, which is the markup phase. And then you can say that in alignment, you know, with these higher time frame charts, where's this one over here, like the Elliott wave, we've now completed, you know, wave 4, which is the end of wave 3. We've completed wave 4, and we just starting out into wave 5. So that's what we're looking at over there. That's a possibility. Let's watch it as it unfolds over there. Point being over here is we expect action to occur between the end of September and the first couple of weeks of October. We expect that strength should come back into the market and lines up really well with that Wyckoff accumulation schematic. Now, we also saw Bitcoin consolidate previously between March and November last year. Ironically, all very, very similar price action, right? March to November last year, 222 days consolidation, a very long one. And then we had that continuation up. Well, if you look at this one was also March to, that would take you to November, 222 days. And then will we have continuation? That is the billion-dollar question, right? The multi-billion-dollar question. Because if you look at this right now, and we can just quickly move that up, we are now exactly into this consolidation, 183 days. So where would 222 days take you in terms of a date target? Well, 222 days would take you to, there it is, that would take you to the 22nd of October. But of course, that's when you leave the top side of the range. So it doesn't mean that you're going to be hanging around the lows all the way to the 22nd of October. You're just looking for a little bit of a grind onwards and upwards, flipping into signs of strength and reclaiming some of these key levels. So again, you're squeezing into this in between the 200 and the 50 EMA on the 4-hour time frame. At least I spoke to the whale room community about this a whole lot on the live sessions and our expectations. We actually took a long trade based off of this, where you said, you know, not the biggest risk to reward trade, but still giving you the probabilities of about a 1 to 2.5 risk to reward ratio, trading it from the bottom over there off of this wick, reclaiming and trading it into that 200 EMA. Now, if you can start to close multiple candles above that, you can start to challenge the mid-range on your 4-hour time frame, and then we can start to clear one step at a time, each level, right? So here's your trajectory. We are in the green path over here, and we're lagging what has happened in the prior times following the halving cycle. And part of why we're lagging, I believe, is simply due to the fact that we've had the ETF inflows, and it created an all-time high before the halving cycle actually took place. You'll see when we start to reclaim key levels and signs of strength come back into the market, the optimism will come back very, very quickly, and you'll probably see the ETF inflows pick up and increase once again as well. As for ETH, though, we'll have to reevaluate that later in the show. We'll get to that part. I've mentioned it before. Your guys' only job over here is to establish the rock solid positions, sit back and relax and literally enjoy the rest of the ride. When you get into this phase of the market cycle, all you want to do is have the right coins and not meddle with them too much. Don't make too many mistakes, right? Now, I told you guys yesterday that actually my ledger was on its way. Well, I've actually just received it, right? There it is. So I got my ledger stacks. Pretty amazing. I'll open it up. I got it with the skin as well. You can put it in here. Remember, you guys are welcome to get it using this link below, because you actually get a little bit of free Bitcoin that they'll put onto the ledger for you when you receive it. Make sure that you have your stuff safely stored for the rest of the bull run, right? You don't want to be, moving money around through dodgy exchanges and things like that. Use the link below. It is in the YouTube description over here. If you just scroll through to Ledger, if you click that link, you're supporting the channel. This is one product that at least I'd be very proud to have behind us. We don't have a partnership with them yet, but it would be great to get one. You're getting the ledger over here for slightly less, and you're getting Bitcoin on it if you do use the link. And I've said before, you don't have to get the Mondo one like I have. You guys can get, even the Nano S Plus is also sufficient enough. Okay, so on to ETH BTC. Here's ETH BTC, right? Okay, I see you guys asking, where's the new house? Guys, it's coming. We're busy moving right now. Sorry for being late, by the way. We're in the middle of a move. It's been pretty stressful. Okay, ETH BTC over here, still breaking down. This one is just terrible. Let's see. I've suggested it would just be ironic if you look here at the exact top. It occurred on the 6th of December 2021. I said it would be ironic if on the 6th of December 2024 this one bottomed, right? So where would that take it if we continued with this trajectory? I'm actually curious. Let's quickly see if we continued on this trajectory. Oh man, this this could get really bad if it did do that. And you went all the way to the 6th of December, there we go, or 6th of December, a little bit further, there we go, more or less within this zone over here. It's quite difficult to pinpoint this. There we go, more or less over there. That would take it down to 0.032, but that would mean that you're losing a very key level. So I think that anyone that's holding ETH over Bitcoin, just understand that this can go on for quite some time, right? We're viewing this as a strong horizontal, but this doesn't mean that this is where it bottoms. If you look at this, you could do something like this. You could have a spike up. You could continue to come down, and this can frustrate you for a very, very long time. Remember, when it comes to altcoin sectors, it is pretty much 1 year of straight up and then 3 years of straight down. Or grinding down. I shouldn't say straight down, but 3 years of downward price action. So, that's something to pay attention to over there. Your USD pair on ETH is coming into key support over here. This is a zone that you want to have hold. We spoke about this before. If you do focus on the wedge over here that led towards the upside, it was Benjamin Cowan, I think, that identified what happens in relation to rate cuts and how once the rate cuts actually do start to unfold, the prior times ETH did break back down into that wedge and actually lost that wedge coming all the way back down only to later reclaim. So this is a warning sign, something you do have to be cautious of. You don't want to be jumping into a downtrend, right? Wait for some sort of a reversal on ETH. This could theoretically, if this does break down like I've shown on the left-hand side and continue its bleed, then, you could be looking at $1,200 on ETH. And I made a tweet today. If we just go over here, I'll quickly go onto my Twitter account. This was from, there it is. Let's quickly go to that. If you look at this, how crazy is this? it's been Vitalik, which has been selling pretty aggressively. He said that sale from yesterday by a biodefense group that I fund was triggered by an automatic cow swap TWAP order that was set up way back on August the 29th. And that was the last one. That was the last one, guys. I mean, he's relentlessly starting to shill Ethereum, but he's also simultaneously selling it. He says that was the last one. So I don't know if he's telling the truth. If it is the last one, maybe this thing will start to get moving. But if not, wait for the trend to reverse. This one's continuing down. Now, a lot of the coins look like that. So this is why we also have to be careful, because if ETH were to continue to reject, then, we might not be at the breakout level yet. You don't want to preemptively jump into a downtrend until it's reversed, right? So we do have the first sign, like on Injective, if you look here, a little bit of a high low in the making, but this, if it rejects, could just be a trap scenario and you could continue to come even lower. So please do be careful of that over there. We reclaim the horizontal, which is a good sign. Let's have a look at Casper. How's this one doing? Okay, starting to come down over there. If you did take this trade with us, by now you can pretty much shave off at least 33% of your profits, and you can raise your stops into the profit zone so you don't lose any money. If it stops you out, we'll look for another opportunity to re-enter. I see Quinn Development says bull moon on the 18th. Well, wouldn't that be interesting, right? We can go and actually have a look at that. Let's quickly pull this chart up over here. So I spoke about how bulls need to at least survive until the 18th. Let's pull up the moon phases over here. Would it be the 18th? We're marking out 15 days. Look at that. Pretty much 18th will be the bull moon. 18th, that's on Wednesday, September the 18th. It also lines up with where they make their interest rate decision of how much they're cutting by. Just a super interesting time within the markets. It's so interesting how all these things always line up on a chart. So pay attention, watch for things to slowly grind towards the upside over there. We'll have a look at some of the other altcoins in just a moment. Let's quickly view Solana, and then I want to go into a couple of other things. So Solana is still struggling at this level, but I did see there were some massive whale orders that were filled. I believe it was something like $187 million that a whale bought into Solana just yesterday, $187 million worth of Solana. Also, just in Grayscale has now launched a SUI trust. So SUI trust has been launched. Let's see how the SUI chart looks at the moment. Okay, had a big move up the last couple of days, starting to attempt to at least reclaim this level. But remember, this is resistance. This is going to be resistance, the pink zone at $1. That's going to be a big level for SUI to attempt to get back above. If it can flip that, it will look good for continuation. Otherwise, just be cautious over here. But the way, if you look at these prior candles, look at that. Look at yesterday's candle. Look at the day before that. That does look like a reversal or continuation candle, at least high, low, and pushing towards the upside over there. So food for thought. Okay. Sundog, big push towards the upside over here. Somebody bought like $2 to $3 million worth. Massive wick over there. Profit taking, of course, from other players in the market. Because what would this have taken? The market cap went up to... Let's just quickly let that reset. So the market cap shot up on that trade straight to $1 billion mark. Unbelievable. Sundog, look, it's up to you guys if you want exposure into this. It is still in an uptrend. You can't deny that. If you want to, switch to a line chart and ignore some of those wicks. Okay, no, now what have I done over here? Not my predominant trading platform over here, but if you just look at this as a line chart, it is definitely uptrending, high highs and high lows. It's just, what's the price target over here? How many billions is this actually going to go to? If it does get to $1 billion, well, that's only a 3x from here. So is it worth the risk in a meme coin? I'll leave that up to you. That's a question that you need to answer. Okay, we'll get into some of the alts in a bit. I do also want to let you know there is an initiative currently from ByBit that's running where you can win yourself an iPhone 16, brand new iPhone 16. Use the link in the description below over here, sign up. In order to participate in this one, you do have to fill in the form, right? So you just got to put your name, email address, and your user ID. And then I'll actually be giving it away live on the show on the 19th of September. From that list, I'll pick from that list. So you got to deposit, I think it's like $100. Everything's listed over there. Click it over there. Deposit $100, sign up. Where is it? It should be listed over there. I think you deposit $100, sign up, and you're in the competition for the iPhone. And then for anybody out there that wants to partner with us, by the way, there's also a link all the way at the bottom This is to Mahid. He's one of the BDs for Banter. Go and have a look, scroll through to the bottom. If you do want to partner with us, there it is. Crypto Banter collaboration opportunities. If you want any sort of a collab, please do reach out to him. There it is. That's his, will take you through to his Telegram channel. All right, let's get into some of the altcoin requests for today. I'm going to do a quick scan through while you pull up your requests over there while Hardest gets those ready. And let's just see if there's any outliers over here in the market at the moment. Most of the things pulling down. Any major greens or outliers? Let's see, Astro up a little bit. Not really anything to write home about considering the prior candles that have been down. Okay, let's see. What have you guys got? Mini. Yes, we can pull up Mini. We did look at it yesterday. It was trying to reclaim the mid-range, which it must have by now because up another 36%, which is looking good. This is one of the coins that I'm in, right? So this is one of the positions that I have. I didn't allocate any more because I really wanted to see a key level hit, either the bottom of the range or the top of the range, which we have not yet seen. Okay, resistance cat. Let's have a look. Also, holding this for the long run. I think we got in sub $1 million market cap. I'm continuing to hold this position over here. So if you guys want to join, you're welcome to. We have 6,430 holders in this coin, and this is a higher beta play on TON, the Telegram coin, right? Okay, what else? Giga. Okay, Giga's still in about the same place as yesterday. CatDog has been super wild. This one is like absolute, high volatility, 100% up in a day. The next day it's straight down. I don't own any of this one, but that is one of the requests. Okay, let's go to Super. We know Elio's coin. Let's have a look at Super. How's that one doing? Okay, Super. Let's pull that up. Okay, so Super, you did reclaim this key level. I haven't looked at this for a while. Let's just zoom out. Okay, I'll trade at level to level. That's your main range. So I would be focused on these zones over here. Just want to pull that down a little bit more. All right. So I would be viewing this. As long as you can hold above here, you can trade it back to the top side of the range. I do believe that because yesterday we had a look through a whole lot of the gaming coins, and what we noticed is that a lot of them have about 100% range, right? So expect that things will continue to chop within that range, and that does actually present a pretty big trading opportunity. Like if you look at the sides of the range, 111% yesterday, but they were between 80 and around 100%. So trade that range, milk it for all that it's got. When it comes near the bottom of the range, you can buy. When it comes near the top of the range, short sell and expect a rejection. Okay, and see another question around Popcat. We can have a look at Popcat. Before we go into Popcat, let's just quickly double check Mantra. So Mantra still looking very, very strong. One of the strongest in the real world asset sector. Bulls will be looking to hold up and defend above $1.04. Okay, Popcat. Let's go. Okay, Popcat still looking good. The level to reclaim for trend continuation is going to be the top side of the range. That is 71 cents. If you can hold above 71 cents on Popcat, this one's probably going to new all-time highs very, very quickly. It is also one of my top picks, one of the biggest positions that I'm holding in terms of the meme coin sector. We can also have a look at EOS under the AI sector. So let's see EOS. There it is. Okay, so still chopping about. Just zoom in and look at these daily candles over here. So I'm going to watch for about 37, 38 cents. I don't think it's a bad buy to at least, DCA a little bit into the zone. Just observe if this range level is holding. I'm going to clear this up so it's not so noisy, but pretty much as per my drawing over here, looking for something like that. Bounce up, come back down, pull back into the zone around 35 cents, hold that level, and then hopefully we have continuation from that point onwards. Okay, I see you guys in the chat asking about unboxing the ledger. Yes, look, I can unbox it for you right now. Here's your ledger stacks. I'll show you. It's quite a big box considering how small it is. So there it is. And if you open it up, it's literally in the corner. Oh man, dropped it. There we go. It's literally in the corner over there. This is the size of there we go. The ledger stacks. So excited to use it. I'll probably set it up later. If you guys do want a video on that, please do let me know in the YouTube after the show. I'll go and check it out. If there are enough people say they want a video of how to set these things up, I'll do that. For the rest of you, make sure you get yourself a ledger. There is a link that's below. You'll get Bitcoin on it as well for free if you use that particular link. I'll see you guys all on the next show. I hope you have a great day. I'll see you tomorrow, same time, same place. Cheers for now.